Our next guest warns a December chill may hit the markets. Julian Emanuel is BTIG's chief equity and derivatives strategist. Julian, always great to speak with you. How chilly are we talking about? With like frostbite or, just unseasonably cold?
Yeah, unseasonably cold sounds about right. Basically, from our point of view, what November says about the near term is very inconclusive. And particularly given all the challenges that you've just spoken about with the panel over the last few minutes, they're right in front of us. However, what we're seeing and what the story of November was, and we've yet to see whether that will not be the case in December, is that there are very strong inflows into equities. And the fund flows can swamp a lot of fundamentals, whether they're near term or longer term. Look, for us, the longer term picture is very intact, particularly given this enthusiasm in an interest rate world that is not likely to go higher. And at the same time, you really don't want to be in bonds because the Fed isn't going to allow negative rates. So the rationale for equities is there. It's just that we've got a lot of things to overcome. And at 21.5 times 2021 earnings, we are reasonably fully priced and not necessarily ready for negative surprises.
What valuation would you buy then, Julian, in the markets, in the S&P specifically? And I'm wondering if it's, for most investors out there, they can't time the market. They can't play it too cute. So unless we're talking about a decent-sized pullback, you're not going to get out and get back in.
Right, and we're not saying that you should do that, okay? If you feel uncomfortable, this is a time that perhaps looking out 3 months, you might want to own some downside put protection. The volatility index, as Guy mentioned earlier, is at the pandemic lows, which to us makes very attractive for hedging. In general, we'd say otherwise you need to sit tight. If you look at the last 2.5 years, it's been a massive roller coaster to the upside and the downside, and the single best strategy has been to sit tight. We expect the same to occur when thinking about 2021. It's just that you have to get emotionally through what could potentially be sort of the down part of the roller coaster.
Hey, Julian, it's Karen. Thanks for being on. As a counterweight to money coming into the market, do you think there's any thought of a strategy of selling big gains in this calendar year to get in front of any big tax changes that the Biden administration could implement?
Well, factually, we've already started to see it a little bit. That's what people have called the, growth to value rotation. We don't necessarily think that even if the Democrats were to take both of those Georgia seats, that you'd really have enough of an impetus to get past that kind of major tax legislation. So whereas that might have been a consideration sort of in October coming into the election, when you started to see the winners begin to underperform the laggards, obviously that's continued. We don't necessarily think that that's a rationale to trim specifically those names, but yet at the same time, they're not necessarily attractive enough at these valuations where we'd want to be aggressive about adding.
Julian, I have to ask you about Bitcoin. I didn't take you for a BTC kind of guy, but in your most recent note, you say Bitcoin to 50K is a reasonable price target for full year or year end 2021. And I'm wondering if that is the case, and you mentioned, sort of the diminishing value of the dollar, et cetera, that's kind of force. Does it have a place in investors' portfolio instead of cash?
Well, it's not necessarily instead of cash. It is instead of the 40% that would be a traditional 60-40 bond allocation. Again, going back to what we were discussing earlier, if the Fed is not going to permit negative rates, and they've been vocal about it, and we're starting to see signs of inflation, it's reasonable to expect that you could have, perhaps losses in bond portfolios in the foreseeable future. And then when you combine that with the fact that you've got this entire cohort of young investors, the same ones that were really aggressively pushing technology stocks, this summer, who have 40-year investing horizons, an alternative to bonds is very, very sensible. And from our point of view, while the Fed continues to add to its balance sheet and the U.S. debt continues to go higher, Bitcoin is a viable alternative.
to extrapolate that, Julian, then should companies consider holding Bitcoin instead of cash equivalents on their balance sheets?
It's certainly, again, an alternative, and we've seen several of them come to that conclusion. And one of the facts of life is that you really haven't been rewarded, and perhaps rightly so, in a zero interest rate environment for cash. I don't know that I'd want to go quite that far because, again, that's an individual, corporate management's perspective. Mm-hmm. But in a diversified investment portfolio, we do think there is a place for crypto.
Julian, great to speak with you. Thank you very much.
Thank you.
Julian Emanuel, BTIG. By the way, we've got a great story up right now on CNBC Pro about how BTIG sees Bitcoin headed to that big round number, 50K. So head on over to cnbc.com/pro to sign up and check it out. Guy, I asked, you can go with the markets there, but I asked Julian about companies holding Bitcoin on their balance sheet because when you were off on Hump Day ahead of Gobble Gobble Day last week, we spoke to the CEO of MicroStrategy who took 75% of the cash on the balance sheet and put it in Bitcoin. And guess what rose today along with Bitcoin to record highs? I mean, MicroStrategy had a very nice performance today. So it's become a Bitcoin proxy. But the question from an investor standpoint is this what you want a company to do?
No, I don't believe so. That to me it's a bridge too far, as they say. I mean, it's great. I'm sure that the MicroStrategy shareholders are thrilled today. But, if Bitcoin is at 12,500 2 weeks from now, which is potential given the volatility, are they going to be as happy? I don't know necessarily if that should be under the edicts of some of this corporate governance, but maybe I'm wrong on this one. I'm sure BK has a different view, but I would be a little concerned if they were putting the eggs in the Bitcoin basket this early, and this in the infancy, still the nation state of Bitcoin and cryptocurrencies specifically. So that would concern me, Melissa.
Shepard Smith here. Thanks for watching CNBC on YouTube.